Hey traders, Nick here looking at Roku. They reported earnings after hours and the stock is bouncing. 8% up even after a tremendous performance. Not just the day was up 0.8% when the markets were kind of flat and kind of scared. So, and add to it that it's been doing very well of late. All right, so let's paint the whole picture. The stock market this year is a lot better than last year. We rebounded off the Christmas lows, and I think the S&P is up like 15% year to date. This guy is up like 111%. So, vastly outperforming the index, the S&P, just as a note one. So it is doing very well. So the earnings up another 8%. That says a lot about the report itself, and it was a good one. They beat almost on all the metrics, and they left no room for the judges to judge it, and they finished the job, kind of like in boxing. They had a knockout. There's nothing in it to sell. Okay, so it then comes down to the question of, do I buy it with conviction for the long term or not? For me, before you hate me for saying it, I would pass at this point in time. I will give you the fundamental reason, and then I will give you the technical reason for it. I'm not saying short it. I'm just saying I cannot buy it with conviction after such a run-up. But then I will make the arguments of where I would buy it and why. Okay, so for the long term, if I'm looking to buy a stock and hold it forever or for a long time, I'd rather put my money in something else that already proved it can do it. And what am I talking about? This is a company that sounds young, but it's 16 years old. And so if they haven't figured out how to be profitable in 16 years, I think onus is on management to prove they can do it. I compare it to, say, Amazon and what they did in the last 10 years. Maybe Facebook would be another comparison. So they figured it out, they got into the business, they figured it out, and they turned a profit, and now they're soaring. This guy still is not making a profit. Maybe they have now the technology and the setup with Netflix and Disney coming, so maybe the streaming wave would help them get there. But until that happens, I will, not allocate a full-size position with conviction. I'd be a weak hand up here. What does that mean? It means I'm in it, I have a stop loss. As soon as it hits the loss, boom, I'm out. So that makes me a weak hand. Who's a weak hand? Also, whoever is in here. If their fast profits become weak hands. That's all there is to it. We sell, and then we ask questions later. We sell at the first sign of trouble. Okay, having said that, that's the fundamental reason why I don't like to chase it up here. The technical reason, I'll probably buy it, but I'll have to be strategic. So I would trade it technically, and I have traded it, and luckily I did trade it here in the short side and here. And I think here. So it seems like I take put spreads, not because I hate the company, but because I have issues with the price action. So let's talk about the price action here. All right, so we can mark it up. So the after hours, I think it's at $70 thereabouts, 70 and a quarter or whatever. I just looked a little bit ago. So that would put us somewhere around here. Okay, so usually when you revisit a fail point, that becomes resistance naturally, right? But it's also the opportunity. Break it, and then you shoot upwards. That's why I have these two white lines. I don't know which will break, but when one breaks, it carries up. So if this trend line broke, they should get to here, just to price out the whole pattern. But there will be resistance along the way, which is here, and that's probably why I did the little zigzag. So it may not be straight through, it may boom, reset, and go higher. And that also goes to say, when you break out of some place, you want to make sure that it's solid footing when you revisit before you go higher. So I would imagine also there would be some resistance up here. So if I'm long, I'm seeing this, I would stay long. Maybe I'll trim a little bit, lock in some profits. I did calls. There are tons of ways I can lock in the profits without getting out of my long position. And I would imagine there'd be some resistance up here a little higher. So this whole area is going to be resistive just naturally. But the whole area here below it should be supportive for exactly the opposite reason. Once they break out of a neckline, it becomes support on the way down. Okay, because it was resistance, and then it becomes support. So technically speaking, if I'm long, I stay long it. I'll manage my winnings however I usually manage my winnings. If I'm looking to get long, I'll probably, if I'm not already long and it opens tomorrow, I would need to know where the levels are. And I'm not sure why it's not showing me a live value of it, but anyway, I can tell you it's around $70. So I would need to see it hold the overnight high. So if it fades a little bit tomorrow, then that probably becomes my trigger to go long. I will set a, if I want it to be conservative, I'll set it at 71. This will include the first. As soon as it closes above 71, I'll say, you know what, I'll chase it. But that'll be a quick trade, not an investment, meaning I will apply my trade rules, tactical trade rules. So I would have to set a stop loss, say, I'll try it, but if it falls below X, I'm out. So to add to the wrinkle, tomorrow's Thursday, and guess what? We have the deadline from the White House on the tariffs. Thursday midnight plus 1 minute, which makes it Friday morning. The new tariffs kick in for China if we don't get a kick the can headline between them. So that's going to be part of the formula. The stocks will probably, who wants to go long into that midnight? Probably not a lot of people. If we get a hint that they're going to kick the can, then they may cause a big relief rally. But chances are people want to flatten out before they go into that headline, so it's going to be bearish. So I don't know what Roku is going to do with that. So it is okay to miss a few bucks, especially when you just missed 8%. No rush to go long, in my opinion, but definitely I would have to set my spots. So 71 would be one place. I'm rounding numbers, just based on personal preference and the time frame you're looking at. This is a 4-hour candle, so if you want to be more surgical, you get this, like an hour, a 60-minute candle. It all depends on personal preference. And as far as where do you get out, stop loss, that's again up to personal preference. Now, so face of it, I'm saying don't chase it. Sounds bearish, but I'm not so bearish that I want to short it because I don't see a catalyst for it to go down. Management just gave me a fundamental reason not to short it. So unless I'm shorting the whole market, I don't want to short it, but I can't go long it without a real catalyst. So 71 would be the first line. And then this one here, here's another thing to look at. If somebody is in it for the long term, they should be happy about this. So if you like fundamentals and you like the technicals, you're going to love the combination of the two. So assuming it did this, not assuming, it actually did this, and it did this, and now it's doing this. So assuming this happens and it breaks out of this high right here, it's actually not right here because you can probably connect this one and get the neckline somewhere down here. But this will be a pretty conservative place. You know that that pattern is actually triggered. This is a cup and handle, right? Cup and handle. And the technicians will tell you the rally should be as big as as deep as the cup. So way higher. So in theory, this zone should be within reach. Again, it probably will do it in zigzags, but that's the technical upside of a cup and handle. I'm not calling for that. I have to see how it handles the highs. I have to see how it handles the threat of the headline tomorrow, the geopolitical headline. All this comes into play. This is not going to rally all by itself. If the markets are falling, it's going to fall. It's a momentum stock. We know it runs fast. So the good news is the past performance has been great. The earnings report also strong. I use Roku, but I will never pay them for anything. I only use it to use the stick to project on my TV. I have an older TV in one room where from my phone it can't receive my signal unless I have a stick in there. I would use Chromecast, but I found that Roku was a little faster, but I would never pay for it. So I'm surprised to hear that they get like $20, 18 to $20 per user ARPU. I found that very surprising. Good news, I guess, but very surprising. All right, so Nick signing out. If you have any questions, let me know.